Today we're going to go over what a triple leveraged ETF is, why do we trade them, and the dangers of decay. So sit back, let's get started. Don't forget, we are also running a special if you want to become part of the Capitalist Academy and trade live every single day with us in the private Discord, and also have access to all of the courses and lectures that we put out every single week. Hit the link down below and use the code FREEACADEMY to get 1 month free. Etf is essentially, think of it as a basket or a folder that holds a bunch of different stocks. Each ETF is exposed to different things. So there are certain ETFs that have a bunch of tech stocks as a part of them. There might be some ETFs that, correlate with oil or gas, and we're going to go over those. But a double or a triple leveraged ETF essentially moves 2 to 3 times of the underlying asset. So some major ETFs that are double and triple leveraged that you will see is something like TQQQ or SQQQ. So TQQQ is bullish towards the Nasdaq and SQQQ is bearish towards the Nasdaq. You'll see things like UGAZ, which is bullish on natural gas, DGAZ, which is bearish towards natural gas. You'll see NUGT and DUST, which are bullish and bearish on gold, as well as UWT and DWT, which correlate with oil. There are also things like JNUG and JDST, which is actually gold miner ETFs. So like I said before, a double leveraged or a triple leveraged ETF will move 2 to 3 times of the underlying asset. So over here on the left, we have NQ or the Nasdaq. Over here on the right, we have TQQQ. So this means that if the Nasdaq moves 1% today up, TQQQ will obviously move 3% up, and SQQQ will move 3% down. We're going to go over the dangers because there are dangers in trading, especially triple leveraged ETFs. So let's say that you have the Nasdaq that's at $100. Obviously, that's not what the Nasdaq is at, but for basic math, that's what we're going to use. So say the Nasdaq is at $100, and today it moves up 10%. Now the Nasdaq is obviously worth $110. But if you were holding TQQQ, it would have moved up 30% because it is triple leveraged and it moves 3 times what the Nasdaq moved. So 30% of the $100 means now you would have $130. But let's say that the next day the Nasdaq actually moves down 10%. Well, if we were at $110 and it goes down 10%, the Nasdaq is back at $100. But if TQQQ, which is now worth $130, moves down 30% because it's triple leveraged, you now have $91. This is called volatility drag, and obviously this occurs because the ETF resets and is rebalanced every single day. So even though the market stayed essentially the same, it went up 10% the first day and down 10% the first day, you lost $9. Now imagine this over a very long period of time. These things can decay, especially triple leverage ETFs, very, very fast. And this is why I never really hold them for long periods of time. Yes, in a bull market, you could swing and hold TQQQ for a year. I mean, people have done it. Would I? Of course not. I usually only day trade them, and I will go over this exact day trade that I took today. You can see where I bought, where I sold. I only made $112, but it was in about 19 minutes. So let's go over why do we trade them, right? The first is that they're easy and they're available, because most people when they're starting are afraid to trade options. I know I was. I didn't know anything about them. I didn't know anything about theta or any of the different Greeks. I didn't understand what strike prices were. I didn't know what in the money and out of the money was. And on top of that, a lot of brokers won't even clear you to trade options. Especially with TD Ameritrade, they're going to ask you, what experience do you have trading options? And in order to do the things that you really want to do with options, you need to have the highest tier, which is tier 3. So a lot of people will turn to triple leveraged ETFs. The other reason that people will trade triple leveraged ETFs is because almost every ETF that is triple and double leveraged will have an inverse. So you could play both sides of the market. Say you don't know how to trade puts, but you think that the Nasdaq is going to go down. You could trade, whether it's a quick swing or a day trade, SQQQ. Let's say you think that oil is going to go down today. you could swing trade or day trade DWT. This gives you a lot of different ways to play the market, especially in a bear market that we're in now, where overall the market is going down. Another reason that we trade triple leveraged ETFs is because you can also trade other things that you normally couldn't trade, like oil, gold, natural gas, and even silver. In most cases, you're going to have great volume in these triple leveraged ETFs, and you'll be able to get in and out of these trades, as opposed to sometimes when you start options trading and you don't have a lot of money, you're kind of forced to buy cheaper options that are either so far out of the money, that's why they're cheap, and then they end up having little to no volume. So even if you're up, 100, 200, 300%, and I've had this happen to me plenty of times, there might not be anyone there to buy it. Or the bid and the ask will be so far apart that if you want to actually get out of the trade, you're not going to be able to sell it for what you want to sell it for. And the last reason is volatility. Now, I personally used to trade these all the time due to volatility because obviously that's where the money is. That's what attracts a lot of people. The older I get and the longer I've been trading, the less I really care about volatility because I'm more of a long-term trader, and when I do swing and day trade, it's usually on bigger cap stocks. But you can make sizable gains trading triple leveraged ETFs. You just have to remember that they are very risky and that you have to use a stop loss, whether it's mental or a physical stop loss, and you do have to understand the decay. Now, the last thing we're going to talk about before I go over this trade is what an inverse ETF is, and I did talk about it before. An inverse ETF is just an ETF that is bearish, and or if you don't know what bearish is, goes against the underlying asset that it's working off of. So you can see here, if I zoom out, this is a 1-minute chart of the Nasdaq. You can see over here on the left that we opened here, and ever since then, the Nasdaq has been selling off. But SQQQ has been going up. If we zoom out again and we go to something like TQQQ, obviously we're going to see that this mimics exactly what the Nasdaq is doing. Now, because it's triple leveraged, it is going to move 3 times in either direction. You can see up here that the Nasdaq is down about 4% today. Well, this would mean that TQQQ is down triple that, which is almost 12%. And obviously, SQQQ will be up about 12%. So now let's go and let's look through the exact trade that I took earlier. So this trade was right at market open. And the reason that I took this was I didn't know how long it was going to take for TQQQ to bounce, but overall the Nasdaq was out at pretty strong support that I felt. So I figured I would take the trade. I originally planned on holding it for maybe a couple of hours, potentially swinging it over the weekend, but I didn't really want to do that with how volatile things are. So if we look over here, it is 9:45 on the Nasdaq, and it is 9:45 over here on TQQQ. So you can see this is where I got in at $41.83. Now, obviously, I sold up here for a decent profit of $112, and I sold at $42.95. So we had a bit of a bounce. I was planning on it to just continue going down, maybe averaging. That's why I only took 100 shares. Obviously, the Nasdaq bounced a bit. We held on this EMA. We pushed up again, got rejected by the VWAP, but we bounced again on this EMA, pushed up, pushed up. I was maybe going to end up, actually, no, I did sell here. I was going to hold it, but I ended up taking my profits because this 200 SMA, the gold, was very strong. And we can see that it actually did get rejected. Thank God I sold, and ended up selling off for the rest of the day. So this is where I got out. Now, even though the Nasdaq only went up about 1.5% within that move, we actually made a 4.64% gain. That is the power of a triple leveraged ETF, and that is why a lot of people end up trading them. If this video helped you guys, if you have any more questions, comment down below. Make sure you guys hit the like button, subscribe to this channel, and share this video with anybody who needs to see it. Until next time, guys, have a good weekend, and I'll see you.